Hi, Bob.
Oh, hello there. Hold on one second here. Oh, hi, Sasha. Haven't seen you in a while. How you doing? Looks like
I
you did
know.
pretty darn good on the test, huh?
Yeah, it was a breeze. Thanks for the help
Yeah.
on
Well, we
the
don't want that first
review.
one. We don't want that first one to be a buzzsaw, as we
I know, I was so scared.
start easing them. I bet you're still fighting the debits and credits a little bit.
Yes, but right now what I'm really fighting is this finance.
Oh, that other class. I'll do what I can
This,
to help you with that.
yeah, I
Um,
might come see you this evening because that's where I'm getting.
if it involves mathematical formulas, I have to kind of study it before I even get to you. But if it's
It's
about
okay.
normal business, and different terms and things, I should be able to help. That's a
Okay.
tough little
Well,
class. That's a hard class.
it is. And I can't seem to get a hold of Cornelia at all.
Yeah.
I'm sure
Okay.
she's swamped. But anyway.
No, she should get back to you. So who do we have here with us? Hi, Shannon. How you doing? Shannon is muted.
Sorry.
Shannon is no longer muted. Nice to see you, Shannon.
Hi.
It looks
Here.
like you did pretty good on the test, huh?
Yeah, it was a lot easier than I expected.
I don't know. Like I was just saying, we're not trying to keep it a secret from you.
Yeah.
All right. We'll wait another moment here. Did you guys look at chapter 7, the speech we did on chapter 7 yet? On the bank reconciliations?
I tried to look at it yesterday and it wasn't up yet.
Mm.
I don't know why Cornelia's having trouble with that. Let me make a general announcement. It's probably easier to find them on my YouTube channel, to be honest with you.
Yeah, that's where
Okay,
I go.
okay,
Yeah,
yeah. I'll look
just
there.
go Bob Smagula YouTube and hit one button, and the most recent stuff will be at the front. And I've got 230, 240, all kinds of goofy stuff on that thing. Okay. All right. Well, we're missing some of the regulars. Where's Christine and where is Eric? But their loss is our gain in terms of attention, I guess, huh? So let me get going here. Allow me to share a screen. Share a screen. Share. Okay. Did you notice we're temporarily skipping chapters 8 and 9? We're going from 7 to 10. Chapters 8 and 9 deal with payroll, which we will cover at the end of the course. So we're going to go with the chapters 10, 11, then we don't do chapter 12, and then 13, 14, and 15 is almost a rehash of the earlier chapters. So we're getting there. Good morning, Krista. How you doing? All right. So I guess we're ready to roll here. Well, that's not what I want to see. That's not what I want to see. Hold on. Where is it? Okay, just having a little trouble with the loading here. Give me a second. Come on, what are you doing to me? We got a problem here. Hold on. I'm going to have to dig out. Let me get my thumb drive to dig this out. Yeah, I remember this chapter giving us a hard time last month. I thought this had been fixed. Found one thing. Come on, chapter 10, come up. Ah! Darn, darn, darn. I'm so sorry, guys.
That's okay. Bob, it's not you today, it's me. So I'm gonna actually just mute myself and take off my video, but I will be here.
Okay,
All right. I'll see you this evening.
okay, bye-bye. The problem is when I go into chapter 10, it's bringing up other things and it's very irritating. Look, I did this before, I can find it. Come on now, come on. Come on, come on, come on, come on. Oh, man. Darn, I never expected to run into this problem again. We'll figure something out though. Give me another couple minutes here. Toshiba. Fall. Power plant. This is all 230. It's 230. Oh, and you thought I was gonna get lost today, huh? All right. Now let me share this with you. New share, chapter 10. Okay, we can see that, right, Shannon? We can see it. Just let me know. Okay, I got the friendly thumbs up. Okay. All right, let me take a deep breath and get myself going here. Set this up the Sheldon Cooper way. All right. Okay. Okay. Chapter 10. Chapter 10 and chapter 11 are somewhat mirrors of each other. In chapter 10, we're going to get into sales and we're going to get into a bunch of contra accounts that reduce sales. Remember these next few words. Never forget this next sentence I will speak. Never debit sales. Never debit sales. Never. But we have to reduce our net sales. And we're going to do so with contra sales accounts. So you never debit sales. That's the first fundamental to remember. You have that clear in your mind, that will help a great deal. Okay. Describe merchandise sales transactions. These are purchases of goods. We're just talking about buying, somebody buys something from Costco or Target or something, huh? What's the retailer? The retailer sells to the final customers. When we are retailers, the four of us sitting here today, we are the retail customers. The stores are the retailers. Retailers sell to the end user of the product, okay? And it's the end user that has to pay the sales tax. So we have a sale, and normally remember we always said there's always paper backups for things? Well, here you might have cash register tapes, a summary of the cash register tape. It could be in the form of a report that your in-house system prints out. And there's usually a sales ticket or an invoice. Sales ticket, we know what that looks like. This customer bought one Shimano, whatever the heck that is, for $440. And it looks like there was a tax on top of that of 0.5%, okay? The wholesaler is the middleman. That's the guy in the middle. Coca-Cola cranks out thousands and thousands of cans and bottles of soda every day, thousands of cases. They don't sell, Coca-Cola doesn't drive up to 7-Eleven and drop off a few cases. They sell to a middleman called the wholesaler. This is the guy who buys from the manufacturer and then sells to the retailer, who then sells to us. And just like a sale from a retailer, we have the normal things, the sales invoice, which we just looked at. And they're just showing you the flow here. Customer sends us a purchase order. We interpret it. What that means is we just read it. And then if we think they're credit worthy, we will sell it and create a sales invoice. Sales invoice. Picasso Painting bought a couple of things here for totaling $580. Apparently no sales tax. A credit memo. Credit memo. All this is permission from a seller to let a buyer return merchandise. That's all we're talking about. I think they're kind of old-fashioned. It used to be an actual printout called a credit memo, and a customer would call your store and say, "Hey, Bob, I'm returning 3 of these gizmos that don't work properly, and I want a refund." And then I would fill out the credit memo. I would send it back. Then when they got the credit memo, they had their document to get the money back. A credit memo just means that we've got an agreement to return something to a buyer, okay? And a credit memo looks just like the invoice. The only difference is it says credit memo up on top, and often it's written with minus signs, okay? Credit memo. A credit memo to the seller, seller is the document we're working with here. Sales accounts. Okay, now we get into some good information here, some new things. Merchandise sales. To account for merchandise sales transactions, we've got some new accounts that you need to get familiar with, okay? Well, we know what sales are. We learned in chapter 1. Hi, Christine, welcome aboard.
Thank you.
Okay, you're gonna have to catch up with us now. We're
That's
just starting
fine.
with, do you know what an invoice is?
I do.
All right, then you're pretty much up to stuff here.
Yeah.
Okay, came in at the right time. We're getting into some new material now. Sales, we know how to record a sale. We debit cash and we credit sales. And at the end of the month, we had $1 million worth of sales. But during that month, some of our customers returned goods to us. They returned goods to us because they were defective, or they decided they didn't want it. And our policy is we take anything back. Well, we gave them an allowance. We sold somebody a toaster for $35, and they didn't like the way the toaster was working. So they wanted to bring it back, and we say, we don't want it back either. How about I give you a $20 allowance discount, take it off. And then you have sales discounts. Sales discounts. These are not the type of discounts where you walk into a store and there's 40% up. These are the type that are very specific in accounting and have a proper treatment. Sales tax payable. Well, who pays the sales tax? Obviously, the customer pays the sales tax, but who remits it to the state? That's the company who made the sale. So the sales tax payable is always paid by the customer, but we're the ones, the company is the one responsible. They have a fiduciary duty to turn that money over to the state. Where it says customer refunds payable, our faculty has decided to ignore that. We don't know, we've never even heard of this being done much in the working world. So we're going to skip that little part. You will not have it on the test. And if somehow a question on it does leak through, I will cull it out. I will get rid of it like a bad apple, okay? So let's look at what they're showing us here on the accounts. Oops, sorry. Uh-oh, now it doesn't like my touch. Hold on, let me move this down. Okay. Accounting for merchandise transactions. I think you can see this pretty clearly. Under liabilities, we now have a new liability. Sales tax payable. The sales tax is not part of the sale. The sales part is always going to be the merchandise multiplied by the cost per unit, the price per unit, okay? And we never debit sales, Christine. That's the one thing I was pounding us in the beginning. You never debit sales. Never debit sales. What you do debit are these contra accounts, sales returns and allowances or sales discounts, okay? We're going to talk about gross sales. When you see the word sales here, those are gross sales. No deductions coming out. After we subtract the deductions, we're come to something called net sales. All right, net sales. And the sales account, it's a revenue account with a credit balance, right? Everybody credit balance used to record sales of merchandise. It's credited for the selling price of the merchandise, and that's all. It's not credited for the sales tax. So if we make $100 sale for cash, we debit cash, credit sales. Well, we learned that back in chapter 3, I think, right? If the same sale is made on account nobody had money, we debit accounts receivable and we credit sales. We're crediting sales even though we've not been paid yet. Everything's on an accrual basis. Sales tax account, sales tax payable. It's a liability. It becomes the company's liability. It's a liability account used to record the taxes collected on sales owed to the taxing authority. Most states require retailers to collect sales tax on sales to final customers. Yeah, that's how it is in California. And you turn them in, I think it depends on the size of the company, but typically you turn them in quarterly, as I remember. Is that true now, Christine? Thank you so much.
Yes.
Yeah. And that's when you fill out the DE3 form, right?
Right. Wait,
Yeah.
is
What is
it?
it?
Yeah, that's right. It is. Yeah.
DE3, unless it's changed. Okay. So you credit this when the customer pays you. You're going to debit cash for $106. The sale was one item for $100, and the $6 extra is the sales tax, which is now your liability. And let's take a look at a journal entry here. Cash sale for $100 plus 5% sales tax. So soak this in for just a second here. Debit cash. Debit cash. Credit sales. That's always the merchandise amount. And we credit sales tax payable. At the end of the month or whenever, we have to pay that $5. If a credit sale is made for $5, 5% sales tax, guess what? It's the same exact thing. The only difference is this was a cash sale. This is accounts receivable. It's the same thing. The merchandise extension is what goes on to the sales. The sales number will always be 10 units times $10, in this case, equals 100, okay? Now we get into something new as well, huh? We are now talking about sales returns and allowances. It is a contra account. It's one of those outliers. It is a sales account, but it contains a debit balance. Debit balance. And on the test, you get a lot of questions on, is this a debit balance item or a credit? What's the normal balance? It's a contra revenue with a debit balance, and it's shown as a deduction from sales on the income statement. This account is debited rather than sales so that business can more readily keep track of this activity. In other words, if you debited sales, well, it would still work. But companies want to know how much of our goods were returned to us, right? They want to know how much they gave in allowances, and they want to know how many people took a sales discount. So the contra revenues are a debit balance against the credit of sales. And here we go. The customer returned something to us. The customer referred to the credit memo previously shown. Well, let's do that. I'll play their game. You see the credit memo here? $46 plus $2.30 in tax. Now, this customer, Wilma Cutts, she's returning some goods. So let's take a look at it. Well, first of all, we know she does not owe us $48.30 anymore. So maybe the easy way to do these transactions is say to yourself, well, the whole receivable has to come off. So maybe we can say credit accounts receivable. She doesn't owe us that anymore. The merchandise was $46. That was 2 units times 23, $46. The difference is a sales tax payable account we are now debiting. We credited it when the sale was made, and now we're debiting it when we find out our customer is returning some merchandise. Sales returns and allowances. Sales returns. Now, here's what we're not going to get into, these timing differences on sales returns and allowances. I was just saying before you got on, Christine, the stuff with the sales refunds, we're not teaching that for some very good reasons, which I can get into more. Sales discounts. Okay. This is another contra revenue account. And again, this is not the kind of discount where you walk into the store and you hand the guy $100 and he says, oh, I got good news for you. It's 20% off today, $80. No, you don't record that kind of discount in your financial statements. That's just a normal merchandise discount or even a trade discount. A contra revenue account used to record discounts given to customers who buy merchandise on account. What we're talking about here are businesses offer cash discounts to encourage prompt payment. We sell something for $100,000 today, and we have a deal with the customer that if they pay us within 10 days, we'll take 2% off or 1% off. We do that to encourage early payment. We would rather have, say, $980,000 today than $1 million in 30 days, okay? So we want to keep careful track of these cash discounts, also called sales discounts. Prompt collection of accounts receivable reduces risks that receivables will become uncollectible. And again, it's a contra account with a debit balance, and it reduces sales because we never debit sales. Take a peek at this chart now. This is super important. You need to know this very well. And, hold on 1 second. Jesus. That garbage truck has amazed me. He fascinates me every Wednesday, how fast he can back up. I can't drive that road that fast going forward in my car. I digress and I apologize. You see where it says terms 2/10 net /30. What that means is we're going to read that as follows: 210 net 30. It means that we give a 2% discount if the customer pays within 10 days, 210. Otherwise, they pay the net, the whole thing in 30. So that's read as 210 net 30. 210 net 30. 2% discount if the customer pays in 10 days. Otherwise, they pay the net, the whole thing in 30. 2% net 30. And you can have a million of them. They're also showing you a few other examples. 1% 10, 1% 10 net 30, 2% end of month net 30, 3% 10, etc. So these are the discounts we do record, and we record them only when we get the check in the mail. So let's see what we have here. Merchandise is sold for $100 and the credit terms are 2% 10. So let's look at the sale, the first line here. Well, that's pretty easy. We sold something for $100. We debit accounts receivable or cash, and we credit sales. We don't worry about the discount at the point of sales because we're not sure if anyone's going to take the discount, okay? Now, 8 days later, we get a check in the mail. We get a check in the mail for $98. So we're going to debit cash $98. We realize these people don't owe us $100 anymore. So we credit accounts receivable. And the difference is a contra revenue account of $2. Our net sales are $98 at this point, 100 minus the 2. And that's exactly how it's shown on the financial statements. The AR ledger, well, we know this is pretty easy. We know what the general ledger looks like. It's got the transaction and the balance. Let's look at these 6 transactions. These happen to be all the same thing. These are all sales on account, and they include sales tax. So we sold it to Enrico Lorenzo, Brenda Myers, Edith, etc. Wilma Cutts has come back for another 620. Okay, so we have 6 transactions. They're all the same. So let's take a peek at them. Let's look at the first one. We sold some merchandise for $1,520. That's the extension of the merchandise times the price per unit. The sales has to match what the merchandise sold for. There's no discount in there. There are no sales taxes in there. Well, Lorenzo owed us $1,596, but he only paid us $1,520 because he paid us in time to collect what appears to be I don't know, 2% discount or something. Oh, I'm sorry, that's sales tax payable. My bad. Oop. We're not talking sales discount. We're talking sales tax payable. Let's see if I can do better with Brenda Myers. I always do better with Brenda. Accounts receivable, she relieved herself of $462 by only paying $44. And it looks like there was a sales tax of $22 on that. So these are not too tough. I wouldn't expect to have any real issue with this after you do a few. Accounts receivable, sales, sales tax payable. If you put the sales tax payable by mistake in sales, you'll really have a bunch of problems. You'll never be able to figure out how much was the sales tax later. Posting to the general ledger. Well, we're experts on this now. Enter the date of the transaction, the amount of the transaction, the new balance. And you're probably a little bit sick of looking at this here, but let's do it. Let's do it. Here is your journal entry. Here's the journal entry to record the sale to Lorenzo, the journal entry to record the sale to Brenda Myers. Look at your general ledger. Accounts receivable, that comes right down here to a debit to accounts receivable. We have a debit to accounts receivable of $462. We have sales of $1,520 and $76. $1,520 and $76. How come I don't see the sales account there? Ah, there it is. $1,520, and then you had the $440 for Brenda, and here is the sales tax payable. So that's just our normal general ledger. Normal general ledger. We had a balance in accounts receivable of $12,000 at the end of the month, and then we had our first sale on the 4th. That goes up by $13,596, goes up, etc. Posting to the general ledger. T accounts, my friends. What's the accounts receivable ledger? Well, it's pretty similar to the regular general ledger. Accounts receivable ledger. It's also called a subsidiary ledger, and you'll hear a lot of that in accounting. Subsidiary ledger. General ledger is just that, general. Cash, all you see in the general ledger for cash is a beginning balance, an increase, a decrease, and the new balance. There's no real detail there. If you want to see detail, maybe you need to go to the sales journal or something, or you want to look at your bank reconciliation if you want some detail. Same thing with everything else on the balance sheet. There's always a subsidiary ledger. Accounts receivable, we just looked at it. All it said was that we had a beginning balance of 15,596 or whatever it was. Lorenzo bought something, Brenda Myers bought something, we have a new balance. If we want to see real detail, we go to the accounts receivable ledger. The accounts receivable ledger is a ledger only for accounts receivable. And we're going to see the individual customers as opposed to the general ledger. So let's take a look at it here. It's a separate subsidiary ledger, and it contains the individual accounts receivable account for each customer. Each customer is assigned an account number, and a summary is prepared at month end. So let's take a look. Posting to the accounts receivable ledger. It's going to look exactly like the general ledger. And you do the same thing. You enter the date, the amount, the new balance, and a reference number. It could be, like they're saying here, it could be a slash, a check mark. It could be a lot of different things. So let's take a peek. Here we go. Here we go. Okay, here's what we just looked at. We just looked at Lorenzo has sale of 1596, and we traced that sale all the way down into the sales right here. This on the right side, it's your general ledger that we just looked at. Now take a peek at the subsidiary ledger. Subsidiary. Here's your accounts receivable ledger. Well, here, instead of seeing general ledger accounts, chart of accounts, we're going to see customers in some kind of order. It could be alphabetical, if not, or it could be by number or something. So look at Lorenzo. He had no balance to begin with, and now he bought something for 1596. This guy owes us 1596. Same thing with Brenda Myers. Okay, so that's not too bad, huh? Now, the key important thing to remember is at the end of the month, the balances in this AR ledger better equal the balance that you have in the general ledger, okay? The auditors are going to come in. They're going to say, who owes you this $14 million? And you're going to say, well, Lorenzo owes us $1.5 million. This one owes us 462, etc. This is the detail. The subsidiary, by definition, is a detailed rendition of a particular account in the chart of accounts, okay? Relationships to remember. Relationships. Entries in the general journal posted to the general ledger. We just learned that. After the posting of the accounts receivable ledger and the ledger is completed, total of the accounts receivable ledger balance better equal the balance in the general ledger. If they don't, it's quite the problem, okay? And the accounts receivable ledger is simply a detailed listing of the same information that is summarized in the general ledger. Accounts receivable, general ledger. Accounts receivable ledger, the detail would be the customers. Now, let's look at sales returns and allowances, okay? Sales returns and allowances. Uh-oh, Wilma's back, huh? Wilma got permission. We sent her a credit memo. She called us up and said, I want to return merchandise. And we said, okay, here's your credit memo number. Put that on your information, please. So she returned these goods. We are never debit sales. I guess you heard me say that, right? We've never debit sales. Never, never. What do we debit? We debit the contra account called sales returns and allowances. And you know it's a contra account just by looking at the posting reference. Look at that posting reference. You see where it says 401.1? That 0.1 probably indicates a contra account. Sales were probably 400, and sales returns and allowances are 401 pop 1, okay? So this person returned $46 worth of merchandise that she had paid the sales tax on. She already paid the sales tax. So we owe her $48.30. Okay. Debit the contra account, debit the payable we no longer have to make, and return all of the $48.30 in accounts receivable. So let's take a quick look at the general ledger. Here's the 4830 coming down from above here. 4830. We follow that guy down if we want. And we see it in accounts receivable. It reduced accounts receivable. And the subsidiary ledger, which lists all of your customers, shows you the 4830 coming out. So her balance to us now is 602.70. She had a prior purchase in there. Credit card sales. Credit card sales. Credit cards are cash. Okay? Credit cards are cash. You get the money pretty much instantly. You might have to wait a couple hours, maybe even a 12 hours, but you get the money pretty quick. So I call it cash. Bank credit cards are similar to cash sales. Cash is available to the business as soon as that deposit is made. The credit card company makes electronic deposit to merchandiser's bank account for a gross amount of credit card sales less a processing fee. In other words, when I bought this jug of soda this morning at 7-Eleven for $2, for $2, 7-Eleven did not get $2 because I charged it. Visa charges them 10 cents, say. So they only got $1.90. The sale, though, was $2. They get credit for the sale of $2, minus the credit card fee. And the fee is based on a gross amount of sales times, including the sales tax, okay? The fee is based on the gross amount of sales. It says including the sales tax. I find that hard to believe, but I have no reason to question them. So here we go. Oh my goodness, now look at this. The sale of something using a credit card. My goodness, we got 4 line items now, 4. Well, we're gonna debit cash. Some people would argue you would call that accounts receivable dash credit cards, but it's cash. We debit cash. And then we've got a bank charge of $4.20. So that's a pretty good, that's 4% that they're taking out. So the sale was $100. The sale was $100 and the sales tax payable is $5. So let me go over this one more time, break it down. Let's start with the sale itself. We credit sales for $100. Oh, there it is. I was looking for my cursor. We credit sales for $100 and we credit sales tax payable, $105. Okay. But how much money did we actually get from the customer? We only got a $100.80 because Visa chops $4.20 right off that sale. Okay. Makes sense, Christine? Not too tough so far. Now we have to journalize these cash receipts. We received cash on account from Enrico. The first 3 entries received cash on account from Enrico, Brenda, and Edith. They're pretty much all the same. Then we had cash sales, $3,600 plus tax. And we had credit card sales plus tax. And then we had some credit card expenses on those bank credit card expenses on these sales are $900. So let's see what we're doing here. Here's the journal entries. The first 3 we said were all the same. It's simply debit cash, credit accounts receivable. We're getting paid now, we understand, right? We're getting paid. We debit cash, we credit accounts receivable. Then they had a cash sale. They had a cash sale of $3,600 plus sales tax. Let's take a look at that one. The cash sale was $3,600. Sales tax, which the customer has to pay us on top of that. That turns out to be $3,780. That's what this customer owes us. And once they pay us, we owe the government $180. We owe the State Board of Equalization. And then the last one was a credit card sale. I just want to see something here real quick. There's a credit card sale of $22,500 plus sales tax of $1125. So here we go. Might be easier just to concentrate on the sales piece first. We credit sales for $22,500. That's what they bought. They bought a used car for $22,500. They have to pay sales tax. So that gives us a total of $23,625. But we're not going to get that amount of money. We're only going to get $22,725 because of the 9% takeout here. Looks like it was 4% sales tax. Okay. Anybody have questions? Anything you want to talk about or unsure? Okay, I'll keep going then. Here we go. General ledger. We know how to post to the general ledger. I'm going to skip that. Let's look at the accounts receivable ledger. Now we're taking the payment. We're taking this payment of $1,596 and $462, and we're posting it to the subsidiary ledger. The subsidiary needs detail on accounts receivable. So that's not too tough. And then finally, at the end of the month, we prepare what's called a schedule of accounts receivable. And this is just like your trial balance in a way. All it is the ending balance that each customer owes us at month end. It's prepared to verify that the accounts receivable balances equal the general ledger balance. Alphabetical and numerical listing, doesn't matter. It's prepared at the end of the month. The total calculated in the schedule is compared with the balance in AR in the general ledger, and they must be the same. If you have a difference, that's a problem. And look at our simple report here, our very simple report. Schedule of accounts receivable. Helen Avery owed us 2302. Wilma owed us that 651 after she returned the 290. Heidi Schweitzer, Ken Olmert, Vivian Winston. So our total per the schedule is 14,331. If you looked at the general ledger, you should come up to the same number. Okay. And now they're talking about errors, finding errors. Let's not talk about finding errors. We always talk about that. What it boils down to is double check your work. Maybe use that trick with the divisor of 9. That might help a little bit. Otherwise, you start all over again, huh? Okay. I have a little more for you. This is your lucky day. I just want to spend a few more minutes on a report here. There it is. Okay, let me share this thing. New share. Uh-oh, hold on. Where did it go? Where did you go? Okay, there it is right there. Now share the darn thing. Share. Okay, here we go. I'm going to take us through this briefly, okay? This is from 230, but this is the type of thing we're doing here. And I can send this out to everybody if you want to use it as a review, okay? We have sales that were made. Let's go to the problem. Come on, problem. Sold 20 units of merchandise to customer B for $5,500. And the terms are 3%, 10, net 30. So let's just take a look at our T accounts going here, okay? We sold it for $5,500. You see that $5,500 there? Allow me to start changing colors, 5,500, and accounts receivable, 5,500, okay? Simple as that. We come back to the next one and sold 2 items who charged, now this was done on a credit card with 2%. So the sale is $400. The sale is $400. The 2% discount came out to be $8. We debit that, and we debit the cash for $392. I'm just showing you how this builds up, okay? And hopefully this will be make it a little more clear. Then we got a couple more here. Sold something for $9,000. Nothing too fancy there, huh? Nothing too fancy there. Sold something for $9,000. 9,000. Sale was 9,000. 9,000. Now here's what I really want to draw our attention to. Customer D returned something. He returned one of the items purchased on the 28th. Well, if you look at the 28th, we sold 10 items at $900 each, right? For $9,000. So he returned a $900 item. We never debit sales. We never debit sales. What do we debit? Sales, returns, and allowances. And in this case, accounts receivable. It doesn't look like there was any sales tax there, okay? Got just a couple more. Customer D then paid his bill. He paid the bill. He owed us $9,000 to begin with, right? Owed us $9,000, and he returned one for $900. So he owes us $8,100. So $8,100 goes there. Accounts receivable. And did I fail to put the 8,100 over here? Did I do that? Hold on one second. I just want to see. Ah, I'm glad I confused myself for just a second. He owes us $8,100. We agree? Yes, we do. But he had a discount coming. His discount was 3%. 3%. See that? If he paid us in 10 days. And he did. He paid us the next day. So we have to take the discount of 3% on the $8,100. And that would be $243. $243. What happened to my pictures? Come on, you. Give me yellow. There we go. 243. 243. He settled the whole 8,100. 243 subtracted from the 8,100 is your 7,850. Didn't want to do that, huh? This is your 7,857. 7,857. And then finally, I think we just got one or two more. Finally, customer B paid his balance. Customer B paid us on 12/20. When did we sell to customer B? 11/20. He's not entitled to the discount. He don't get the discount. So what we have here is 5,500 in cash. And we credit accounts receivable for 5,500. And then down here, I'm just going to end the class by showing you this representation here. Here's how it's going to look on your income statement. When we get to chapter 11, it's on purchases. And it's sort of the mirror image of sales with a couple of exceptions. But when we get to chapter 11, we're going to be making up this longer income statement. And this is the grid here. Our gross sales were $14,900, which we see right here. We bring that over. 14,900. Sales discounts were 243. Sales returns and allowances were 900, and the discount was 8. That's how you go from gross sales to net sales, okay? All right, that just about concludes our discussion today. I'll try to attach this to you guys in an email, okay? Anybody, any questions? What do you think, Christine? You're okay?
I am okay.
All right, well, good to hear.
You know, the State Board of Equalization is now called the California Department of Tax and Fee.
Since when?
It's been a couple of years now.
It could have been 25 years ago, and I
Yeah.
didn't really know it because it's been that long. When I first started tutoring here about 7, 8 years ago, I was telling students that you amortize goodwill, and turned out that rule changed in like 1977. But I never worked in a corporate type office. I didn't know that. Cornelia comes running downstairs from her classroom because all the people turned in the wrong information. Okay, you're okay, Shannon?
Yeah, I think it makes sense.
All right. How about it, Krista? Doing okay?
I'm doing okay. I do have a question.
Yeah.
Looking at this spreadsheet, before I take the next class, 2:30, would you recommend I take an Excel class? Because
It would help. It would help. You don't
although
need-
I understand this completely, I
Yeah.
would have no idea how to format this.
Yeah, if you have the time and energy, yeah. But it's not a deal breaker by any means. Some of the
Is
problems
this like
that-
the extent of what you would have to do as far as formatting?
Say that again, please.
Would this be the extent of what you have to do as far as formatting?
No, there would be more to do in 240, and Excel would be a big help on some of the problems. I mean, when I'm tutoring 240 and a lot in 230, Excel comes in mighty handy. Yeah,
Mm-hmm.
mighty handy. We have a course here at the school that I don't think is being taught right now on the Microsoft packages. You know, it's one class where you get PowerPoint, Excel, and Microsoft Word. But yeah, you know, the
So
best
then-
I just took the class. I took Excel 1, 2, and 3. They had them this last time with Norma Egley.
at our school here.
Yep.
How long ago was that, please?
It started in February. So I just took one February, March, and April. They were like 2 Saturdays a month.
Okay.
Ooh, how do I find those?
Just go on the SBCC, the class list or whatever. 'Cause they're on there. Norma still sends me stuff.
Oh, really? Maybe
yeah.
pass
What's
that
the name
along.
of the
Maybe pass
class?
that along to Krista then. Yeah.
Yeah, it's Excel 1.
Okay,
Start with that one was the most helpful.
right.
If you do anything, that one definitely was the most helpful. But
And it was
yeah,
just like a Saturday thing?
yeah, it's like 5 hours on a Saturday.
Oh, that would be perfect. So I don't have to wait a whole nother semester to dive into the next class.
Yeah.
Okay. All right.
I'm going to show you something here if I can find it quickly. Yeah, if this doesn't come up, I got the other one right here.
What's going on, you mama?
See, here's where the Excel can come in handy, and let me share this with you briefly. This is from Accounting 230. Can you see the Excel sheet now?
Mhm.
This is all about amortizing bonds. You'll get a homework. Get a homework assignment where you have to fill this thing out. Okay. And this one is pretty easy because it's straight. No, it's not straight line. That's yes. Yeah. So you'll get this template maybe on a piece of paper, but it's nice if you can just drop the numbers in here and
Right.
everything, and everything just updates automatically.
Yeah, it's a powerful tool if you know how to use it.
Yeah, yeah, no, absolutely. Absolutely. So, you know, if I change the number here, everything, you know, flows right through it.
Yeah.
So, yeah, if you
That
can
would be
take that
handy.
clear, I recommend that for all you guys. Absolutely. Sounds good.
Okay.
Hey, Nastasia, if you finish up with you, how you doing there? What do you got for us?
Oh, good. Nothing. Just listening, being a wallflower today.
Okay. So I'll see you this evening then, huh?
Yeah.
Okay. All right. I make a motion and I second it that we'll call the class off for today. Okay.
Thank you, Bob.
Thank
Hey,
you.
see you all later. Bye bye
Yep.
all.
Thank you. Bye.
Stop share.